Okay, everybody, it's me, Gregory Mannarino. It is Wednesday, May 12th, 2021. Yeah. Okay, so are you panicking? Is this the big one? Is there a guy that's been saying over the past, I don't know, several weeks that this market needs to give back? We need a pullback, a real one. What did the market do today? The Dow Jones Industrial Average fell 1.99%. The S&P 500 2.15, and the Nasdaq took the biggest hit, like 2.7. So what are we talking about here? How about nothing? Zero. If you are getting rattled by this market, you're playing with scared money. Scared money is a guaranteed way to get you to lose money, okay? So you need to be a steady player here. You need to embrace these things. As a matter of fact, I think this market has a lot more to fall. I'm not saying it will. I think it should. This market needs a real pullback. 10%, 15%, 20%. These are normal pullbacks. We haven't had a normal pullback in a very long time. What do pullbacks do, people? Pullbacks set a new floor for the market, and they are a setup for a new leg higher. So, look, you turn on Bloomberg, CNBC, Fox Business, they're all freaking out. They're all going cuckoo. They're trying to sell you something. They're trying to sell you fear. They're trying to sell you news. They want you watching their channel so they can charge more for commercials. Me, I'm laughing. I'm laughing all about, because to me, and we'll talk more about this, because there is one little caveat to what I'm about to say. To me, this is a buying opportunity, and if stocks fall further, it's a better buying opportunity. People, like I said, what do we fall? In aggregate, 2% pretty much across the board today. Big freaking deal. Big freaking deal. Well, what would you do if the market had an actual normal correction? What would you do? Would you start crying, sucking your thumb? What would you do? We need to pull back in cryptos too, people. Yes, cryptocurrencies fell under pressure today. Dash, not so much. It's still around 400. I'm looking for a bigger pullback. I don't know. I think this market, including cryptos, has gotten stupid, needs a pullback, which would be bullish. It's a setup for a leg higher. Without pullbacks, without corrections, the market does not go higher. You understand? That's just the way it works. And you should know that if you're a real trader and you're not playing with scared money. So again, yes, sell off today in the market. Okay, big deal. I'm personally loving it. And so should you be if you were a real trader or a real investor. Like I said, cryptos fell under pressure. We still need them to fall more as well. Will they? I don't know. I have no idea. I hope they do. I think it would be a major buying opportunity. Now, there's a couple of clues here in this market we need to talk about, and I want to speak further about the one issue that we may have with regard to this market taking a really big drop. Okay, so hold that thought. Got my lovely notepad with stuff I want to talk about. The dollar today, very strong move higher. 0.7%, that's a big move. That hit gold and silver pretty freaking hard. Silver fell like 2%. Gold also fell 0.8, I think, somewhere around there. Now, crude oil got bid higher. Unrest in the Middle East. Expect that to get worse too. Don't be surprised. Okay, where's the clue here? Where's the clue, and where is Gregory leading to? Did you see the 10-year yield today? Made a substantial move higher. So what is the real driver here? What was the reason why the stock market fell today? Well, it's several fold, but one very big reason, okay? We got the specter here of inflation But it's only temporary if you listen to the Federal Reserve or the plethora of commentators they've been shoving in front of the camera on the mainstream financial channels. Oh, it's just temporary. Yeah, the same people who continue to get everything wrong. These economists, they're never right. They miss the mark by hundreds of percent with regard to inflation today, with that inflation number that I spoke about in my video, which I did earlier today. I hope you got to see it. Okay, so yes, it's the specter of inflation and the consumer who's already hurting in a big, big way. Again, you remember the middle class? You're going extinct. You're going extinct by design, okay? Just get used to it or do something about it. Like I say, raise your awareness. So the market right now is afraid of something. What is the market afraid of? Let's go back to that 10-year yield. Look, all the clues that you need to know lie in three things, people: the 10-year yield, the dollar, and crude oil. So if you were watching those three things today, you understand the dynamics behind them. You probably know where I'm leading. Okay, now 10-year yield moving higher, market going down like this, that's fear. Fear of what? Fear that the Federal Reserve, in order to combat rising inflation, may have to raise rates. You understand? That's the fear of the market right now. That's why stocks sold off. So you can expect some new headlines to show up, I don't know, tomorrow, the next day, maybe even over the weekend. You're going to hear from Fed presidents, maybe even the chairman himself. He's going to get paraded out, or Fed presidents, they're going to parade them out to say, don't worry. We're not going to raise rates anytime soon. People, look, again, I told you, this market is like a retarded child. It must continually get reassured of something. So you're going to hear, again, Fed presidents be paraded out. Oh, don't worry. We're not going to raise rates. That's what the market is afraid of. This market is floating on oceans of debt, okay? The market in its entirety is so distorted from reality because it's floating on top of oceans of debt that it's very afraid that the Fed will nudge rates higher to combat inflation. All right. You see, there's another reason why they're not going to do it, and I'm going to let you in on that clue right now. The Federal Reserve needs the public to cry. In other words, bring them to their knees more so than they are now with our free-fall economy, 70% of small businesses gone forever, Great Depression levels of unemployment. Tomorrow we're going to get another number with regard to first-time unemployment claims. It's going to be in the hundreds of thousands. But the Fed needs you, if you're a member of the middle class, to suffer more. Okay, why? They got to create a crisis, a big crisis. They got to wait for the public outcry. There's not that big of an outcry yet. And then they're going to offer their solution. Their solution is going to be what I've been telling you for the longest time, a 100% digital dollar. They're going to get rid of the dollar in its current form, but they need a crisis first. We're in the opening salvos of this crisis here, okay? And this is a crisis. This rising inflation specter, it's not temporary. Okay, they're trying to sell you that lie, but it is not temporary. Okay, this is going to get much worse. Other crises are going to get worse too, because there's going to be all kinds of shortages, supply route disruptions, you name it, it's coming down the pike. Again, it's all in an effort to bring the people of the world to their knees before the central banks of the world, who are public enemy number one. But stay distracted. Make sure you're paying attention to all the nonsensical things out there so you don't focus on what's the root cause, and that is the Federal Reserve, the central bank of central banks. This is all by design. Nothing is what it seems here. So let's talk a little bit further here. So how about this one? This is a piece of news that came out today. U.S. core consumer prices surge at the fastest pace in 40 years. That's pretty incredible. And then, of course, you got the people now saying, sell in May and go away. You know, that's that old Wall Street adage, whatever. You sell in May and go away, okay? I'm going to sit here and look for opportunities until these opportunities dry up, and they're always going to be there, okay? This guy is going to be a steady player. I'm not going to get in highly speculative anything. You understand? That's just the way that I work. You want to try to pick tops and bottoms in this market? You want to go short this market? Good for you. I wish you luck because you're going to need it. Anyway, look, you all know how I operate here. I am a very steady player. I've been there. I've done it all. And I learned the hard way what not to do. And I'm just out here trying to help all of you. So look, in summary here, we had a sell-off today in the market. 2% respectively across the board. Big freaking deal. Okay, the market needs to drop further. Will it? I have no idea. I'm not in the business of picking tops and bottoms. Neither should you be. Okay, you should be looking for opportunities to take advantage of everything that's handed you. And of course, be mindful of what's going on here. The market is fearful that the Fed is going to raise rates to combat inflation. I don't see that happening. They need a bigger crisis first. And that crisis is coming. That crisis, which is coming, is not by accident. So remember, you heard it all here. All right, people, I think that's about it. I try to keep these videos relatively short. Ponder what I've said here. Think about what I've said here. Does it make sense to you? Or is Greg just nuts? Anyway, I'll read the comments. Let me know. Don't forget tonight, 7 p.m. Pacific Standard Time, I'm going to be live on the Barrel Buddies. There is a link in the description of this video. Please show these guys some love. Subscribe to their channel. Watch the show tonight. I'm going to have a blast, and I am looking forward to it. I'm probably going to be in rare form. So I hope to see all of you there, especially my Lions. You better show up. You better show up. All right, 7 p.m. tonight, Pacific Standard Time, Link in the description of this video. I will see you all later.